Jimmy Song, Jim Bianco, welcome back to Real Vision.
Thanks for having me.
Thanks for having us.
It's such a pleasure to have both of you guys here today to host this conversation, to bring different perspectives on this digital asset space. Before we get started, let's give a little bit about your background so we can frame the context for the conversation. Jimmy Song, why don't you go first? Give us a little bit of a background for people who don't already know. I'm sure people have seen you many times on Real Vision and elsewhere, but give us a little bit of context for your background and how you found your way into the Bitcoin space.
Sure. I've been a programmer all my life. I've been a professional programmer for something like the last 23 years. And I got into Bitcoin back in 2011. And I saw it from two different perspectives. I saw it from an economics perspective. I thought it was sound money when I first heard about it. And I heard about the 21 million limit. And I saw it as a technical innovation as well, because I saw that it was using public key cryptography and all of the different clever mechanisms that came into making Bitcoin work. So for me, my background is very much technical, and I do teach this stuff. So I'm very familiar with the ins and outs of the protocol itself. And in addition to that, having studied some Austrian economics and knowing what sound money looks like and what it's supposed to do and so on, I think Bitcoin, to a large degree, is sort of like the ideal in terms of portability and ability to store value over time as well.
So Jim Bianco, you have also been on Real Vision multiple times. I'm sure our audience knows you, but a little bit of context on your background and how you found your way into Bitcoin and digital assets more broadly.
So I'm a traditional TradFi guy. I've been around the markets for decades. I was actually getting a paycheck during the 1987 stock market crash. That's how far back I go back in TradFi. I joined Bitcoin a little bit later than Jimmy. I kind of got involved in it in the summer of 2017, maybe the spring of 2017 as well. And I kind of became very interested in it. And then coming out of the winter of 2018, being a TradFi guy, I discovered decentralized finance. And I found when I saw it, I almost instantly saw its potential as a disruptive force for the traditional financial services industry. And what I've been more interested in is the whole DeFi boom and what the DeFi boom can mean in terms of the future of finance, in addition to the future of money, as Jimmy was talking about with sound money, with Bitcoin and some other aspects about it as well too.
Yeah. So this is fascinating. We have a lifelong professional programmer with an interest in finance and economics, and we have a lifelong financial person with an interest in technology. It's an interesting meeting of the minds to have this conversation. So let's talk a little bit before we get into DeFi about Bitcoin. Jim, I'm curious. So you talk about coming into Bitcoin. What was it that you recognized from a traditional finance perspective that made you think that Bitcoin was something that was viable, that had legs, that had the potential to really change the way that we do things? I ask this question specifically because there are many people, obviously, in the traditional finance space who were very much Bitcoin skeptics at the beginning. In fact, some who are Bitcoin skeptics still today. What was it that you recognized as someone with a background in traditional finance that made you think that this was something that you wanted to spend your time learning about?
I think it was more along the lines of what decentralized finance was going to bring to the space. The history of technology has always been that it creates a better, faster way to do things by cutting out the middleman. And then by cutting out the middleman, it allows for creativity and this Cambrian explosion of ideas to take place. We've seen that with the invention of email, with the invention of the internet, just going with some recent things with the platform companies as well too. But two areas that it really, technology has not been able to make a dent in any ways has been healthcare and financial services. But now with decentralized finance and the removal of the banks, or the potential removal of the banks out of a lot of their basic businesses, not every business, but deposit taking and collateralized lending and automatic market making or brokerage operations and insurance, I saw within this space the raw, if you want to call it the beta of a new financial system. It's not ready yet for prime time. It's not ready to take to the real economy and say, here you go, here's a better system. But you can see where this is going to be in a couple of years. You could see where it's going. And I definitely think it can be, and it can be a disruptive force that could lead to lower costs, more accessibility to financial services, and a lot more creativity than we've ever seen in financial services. And that's what got me very interested in this space.
I want to throw it back over to Jimmy Song. I'm curious, Jimmy, you're obviously well known as a Bitcoiner in this space. And Bitcoin obviously often, at least in the popular imagination, associated with the digital gold use case, the store of value use case. What does DeFi mean to you? Is it something that you think about in the context of Bitcoin? Is it something that you think is important, or is that just a different framework mentally that you have?
Yeah, I would say when you ask, like, what do I think of DeFi? I think it's a complete misnomer. It has no decentralization whatsoever. It is completely centralized. There's somebody capturing value, usually through a token that doesn't really need to be there. And it's all an excuse in order to create sort of like a speculative frenzy. And this has been going on in the altcoin space since 2011. This is sort of like over and over again what people think of as, I didn't get in early enough on Bitcoin, therefore I will get into all of these random altcoins in some way, shape, or form. And DeFi is no exception. It's not decentralized at all. We just had, I think, Mark Cuban, who invested in some DeFi protocol, and he had the rug pulled out under him. He lost all his money because the protocol token went to zero because the people that created it were like, hey, you suckers, we're just going to take the money. That sort of thing is so like amazingly common in the DeFi space. And the thing is, if it actually were trying to be a new sort of like financial services paradigm or something like that, then you could do everything with Bitcoin. The fact that they want to create their own token and create a speculative frenzy around it tells me that it's not about that at all. It's all about getting the speculative frenzy going. Because you printed your own money, you can sort of like cash in for the people that created the token and so on. So for me, it really isn't anything, and it's the same old story. We've seen it over and over again. I think Jim mentioned that there's like a Cambrian explosion of new things in the Bitcoin space, or at least many of us that are Bitcoin maximalists, we call it the Scambrian explosion of 2011, 2013, 2017, now 2021. It's a continuous sort of like scammy, speculative frenzy that continues to happen. And each time, we're out there warning people, hey, don't go into these ICOs, don't do these like stupid things that you don't really understand. If you don't understand what's going on, you're probably the yield, and that very much is true. Instead, people insist on investing in stuff that they don't understand because of the speculative frenzy, and that's it. That's what's been happening.
If I could jump in there, I'm going to partially agree with Jimmy that the history of technology has always been that two things tend to happen at the same time. And one of them is some kind of a new idea, a new approach is being done. And you could go back to the early days of the internet with this as well, too. And there's also wild speculation on that. And you could go back and you could look at the tech bubble in late 99 and early 2000. And the history has always been, too, that most of the new ideas fail. But the few that don't become transformative along the way. And some of the ideas that fail tend to be the right idea and are not executed properly. As an example, late 99, early 2000, if you would have said, I think e-commerce is going to be the biggest thing ever, and you would have said, great, what do I invest in? Buy Pets.com and buy Amazon. They're the two biggest e-commerce plays of late 99. Pets.com went to zero. Amazon went from $100 to $94. So now you've got a minus 100% loss and a minus 94% loss. And by late 01, you would have said, this e-commerce thing, there's nothing to it. And then Amazon went from $6 to $3,300. And we all know where e-commerce is. This space is going to be no different. there's going to be a lot of scams in this space. There's going to be a lot of problems in this space. By the way, the Cuban thing with Iron Finance might be more of a badly written smart contract than a straight rug pull. I know I might be splitting hairs about what the difference between the two is, but it was supposed to have a million tokens limit, and it printed 27 trillion. And that's what their problem was right there. And this is part of the learning process, and this is part of the risk in this space. But I think that when 80 or 90% of these go away, the 10 or 20 or maybe 5% that stay can truly be transformative, especially for the financial services industry.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.